students, this is CA Minouti Jani from Faculty of Business Administration, GLS University. And today we are going to discuss very important act, the Companies Act 2013. Before we begin with the content of the act, I would like to add here that the Companies Act 2013 is preceded by Companies Act 1956. Due to change in economic environment, with the growth of globalization, there was a need to replace the earlier Companies Act 1956. And as a result, today we have the Companies Act 2013. Before we go ahead with the Companies Act and the nature or characteristics of a company, first of all, let us understand what is company. As you all know, that company is nothing else but a form of business organization. But why there is a need to go for a company? See, we all know that for a small business, when you start as a sole proprietor, then capital is yours, risk is yours, and definitely return is also all yours. But when you want to expand your business, then you need more capital. You need more people to work for your business. As a result, when you go ahead with partnership business, then definitely you get more partners, you get more capital, and to some extent, your liability is also divided among partners. But that does not mean that you are separate from your business. That does not assure you limited liability. And here, as a form of business, company becomes very popular with its different characteristics. Before we go ahead with the company's characteristics, let us go through its definition. Companies Act 2013 defines a company as a company means a company incorporated under this act or under any previous company law, that is section 2 subsection 20. See, any previous company law means Companies Act 1956. A very beautiful definition of company is given by Chief Justice Marshall. A company is a person, artificial, invisible, intangible, and existing only in the contemplation of the law. Being a mere creature of law, it possesses only those properties which the character of its creation confers upon it, either expressly or as incidental to its very existence. This definition explains a lot about a company and company's nature. The first characteristic of a company is company has separate legal entity. Now, what do we understand by separate legal entity? In simple language, separate legal entity means company is separate from its members. Here I would like to add that company is not a natural person. Then how can we give a separate legal entity to it? Law has declared company as an artificial person. That means company has its own legal existence. And as a result, company independently can enter into all the contracts related to company. The beauty of separate legal entity can be seen in some of the historical cases here. The first historical case which I would like to discuss here is of Mr. Solomon. Solomon versus Solomon and Company Limited. Mr. Solomon was the owner of boot business. He sold his sole proprietor business for the sum of 39,000 to Solomon and Company Limited. Now, what was this Solomon and Company Limited? This Solomon and Company Limited consisted of Solomon, his wife, his daughter, and his 4 sons. The purchase consideration was paid by the company to Solomon and his family. They were allotted 20,000 shares and 10,000 debentures and the balance in cash to Mr. Solomon. The debentures carried a floating charge on the assets of the company. Each share was also subscribed by the remaining 6 members of his family. Not only that, Solomon and his 2 sons became the directors of the company, and Solomon was the managing director. After some time, the company went into liquidation. At that time, the statement of affairs was like this: assets were worth 6,000, liability included debentures were 10,000, and unsecured creditors were 7,000. So we can make out that assets were running short of its liabilities. Here, the unsecured creditors claimed that we should be paid first. Why? Because Solomon and company are the same. Solomon, it is basically the business of Solomon which is converted into a corporate form. Not only that, Solomon is having highest shares of the company. Not only that, Solomon is also a managing director of the company. So they should be given preference over Solomon. Here, surprisingly, the House of Lords held that the existence of a company is independent and distinct from its members. So, this is a very important case related to separate legal entity concept, where we can see that though originally the business was owned by Mr. Solomon, he was managing director of a company, but still it was held in a case that he and company are separate. The next case that I would like to discuss here is Lee versus Lee's Air Farming Limited. In Lee's Air Farming Company, Mr. Lee held 2,999 shares out of 3,000 shares. Not only that, he voted himself as a managing director of the company. However, he also became chief pilot of the company on a salary. See, here you can see that he is managing director also, he is holding majority of shares also, as well as he is working for salary. It means he is an employee also of the company. He died in an air crash while working for the company, and his wife claimed for compensation from company. There was a controversy whether Mr. Lee can be called an employee, or is he really entitled to this compensation, as it was claimed that Mr. Lee and the company are the same. In this case also, his wife was granted compensation as her husband died in the course of employment. Court, even in this case, also held that Mr. Lee was a separate person from company, and hereby we can see the rule of separate legal entity enabled Mr. Lee to be the master and servant at the same time. The next characteristic is limited liability. I would like to add here that this is the characteristic which makes company very popular among business people. You can explore bigger opportunities with big capital, with huge capital. Still, you can also have limited liability. What a wonderful combination it is. A company may be company limited by shares or company limited by guarantee. In case a company is limited by shares, the liability of members is limited to the unpaid value of the shares only. For example, if the face value of a share in a company is rupees 10 and member has already paid 7 rupees, then he will be called upon to pay only and only remaining 3 rupees. In case a company is limited by guarantee, then here there is no share capital. Here the liability of members is limited to such amount which they may undertake to contribute to the assets of the company, that also in the event of liquidation only. So, in the case of limited by shares, unpaid value of shares is your liability, and in the case of limited by guarantee, the amount, the guarantee which you undertake is the only limited liability for the members. The next characteristic of a company is perpetual succession. As you all know that there is a separate legal entity of company. It means it's separate from its members, directors and shareholders. So here when we say perpetual succession, it means that members may come and members may go out, but company survives up to the winding up. Please note here, company comes into existence by law and only law can dissolve it. The life of company does not depend on death, insolvency or retirement of any of the shareholder or director. I would like to add here that after World War, I would like to add here that during World War, in one company's general meeting, all the directors, shareholders and members died due to bomb. But even after death of all the members and directors, the company survived. Why? Because company has its separate existence and company has perpetual succession. The next characteristic is of separate property. See, this all effects you can see is coming from the main characteristic, that is of separate legal entity. Once you give separate existence to company, company has its own existence, company can have its own property. So, as a result, company is a legal person, company is an artificial person, and because it is different from its members, it needs to own its own assets and liabilities. And as a result, company is given capacity of owning, enjoying and disposing its own property in its own name. The next characteristic is of common seal. See, we all know that when a company can enter into a contract, when a company can buy its own property, when a company can have its own liability, then how to enter in a contract? Company is not a natural person who can sign. And as a result, company is given common seal so that company with the help of common seal can enter into all the contracts. Company can sign all the documents with the help of common seal. The next characteristic is of transferability of shares. As we all know that listed companies, they gather their capital by issuing shares, and these shares are also easily transferable. So for public companies, transferability of shares is like a blessing that easily they can acquire their capital from the market. However, private company may put certain restrictions related to transferability of shares. The last and the most important characteristic capacity to sue and capacity to sue and be sued. See, everything is flowing from separate legal entity because the company is given separate existence. Now company has its own assets and liabilities. Company has its own common seal in order to enter into a contract. And as a result, if there is anything wrong by a company or anything wrong is done to a company, then company will take all the legal actions only in its own name only. So company is having the capacity to sue others. Not only that, company can also be sued by others. So today we have understood what is company and what are the characteristics of a company. Thank you very much.